midday trading after Ford posted stronger than expected third quarter earnings. Jobless claims fell less than expected last week, and Carl Icahn urges Apple to make a tender offer of $150 billion in stock. I'm here with Keith Bliss of Cuttone Co. Keith, what is the general consensus about this letter on the floor?
Well, the general consensus is we think it's just Carl Icahn being Carl Icahn again. I mean, he owns about 0.5% of overall Apple stock. And listen, he's making recommendations to Chairman Cook to do certain things to improve his investment. There's a lot of people that are dubious whether stock buybacks actually really add any real value to the stock price. I think it was Credit Suisse, they did an analysis over the last 8 years, S&P 500 companies who have done stock buybacks. It hasn't really done anything to the stock price. And in fact, if you look at a company like Cisco that has a perpetual stock buyback, you can see their stock has kind of lagged. So we take it for what it is with a grain of salt. We'll see what happens. I'm sure Mr. Cook will be cordial and have dinner with Carl Icahn when he calls, but I doubt anything will happen.
Could this be a good thing that it actually came ahead of Apple's earnings that we have on Monday?
I'm not sure about that. I mean, if you read into the proposal that Carl Icahn is making is he's asking ostensibly he's asking Apple to use their cash, but most of that cash is offshore. So if they bring the cash back on, they've got a huge tax bill. Of course, they'll have a reduction in their dividend expense. But what he's really asking Apple to do is layer on about $100 billion in debt to buy back stock, and there'll be no appreciable increase in the cash flow of the company. So it's really all about financial engineering and not for the benefit of the company, it's for the benefit of the shareholders. So I'm not sure what benefit it's going to have in front of earnings.
Well, in other news today, we do have Bank of America announcing 3,000 job cuts in its mortgage area. What do you think is refinancing slowdown here to stay?
All depends on interest rates, and we'll see. And interest rates have certainly come back in of late, which is precisely where the Fed wants to see them. And as long as the Fed is still staying in the market and buying mortgage bonds and on the long end of the curve, I think we'll see interest rates come down. Refinancings will come back. We saw a surge in refinancing and home purchases as people saw interest rates kick up, and they needed to get in and do their business right then. As it comes back down, there's still an awful lot of paper that needs to be rolled over from higher rates. So if it comes back in, we'll see refinancings pick up. Hopefully that'll mean that B of A and JP Morgan and Wells and some of the other banks that have had recent layoffs in their mortgage banking divisions will bring those people back. So time will tell, we'll see.
All right, well, in other headlines, of course, a lot of people will be focusing on Microsoft's earnings after the close today, after that $900 million write-down due to slashing prices of the Surface tablet and slashing further prices after that. What do you think we can expect? What will you be zeroing in on in this report?
Always look at Microsoft. I mean, as a famous saying was, is that rumors of their demise are greatly exaggerated at this point in time. They're still a bellwether in both the overall earnings picture as well as tech earnings, so we still look at them. I mean, you can't ignore a behemoth like Microsoft. What will be interesting to see is not only what they do from an EPS standpoint, it's the whisper numbers that they're going to beat by a couple of pennies, so they'll be fine there. But what do revenues look like? What is their long-term forecast for growth? What are they doing with their enterprise business? There was a recent survey that showed that more IT managers, as compared to last year, consider them more essential to their overall IT infrastructure plans than any other tech company by wide margins. So that's a feather in their cap. So what are they doing to capitalize on their core businesses? Will they retrench a little bit and stick to their knitting and concentrate on what they do very well, which is desktop software? We still have desktops in places of businesses. They're not being bought by consumers right now. But what is the look on that? And then are they going to start making or putting any flyers out there for some other products to try and compete against Google or Apple or other things like that? My hope is, from an earnings standpoint and positioning of the company further, is that, again, they'll concentrate on what they do best, grow that business from the inside out, generate some cash, and then be able to make wise investments into future products.
Sure, cloud computing will be a huge focus as well.
Correct.
All
That's
right.
correct.
Thank you so much, Keith Bliss of Cuttone Co. I'm Brittany Umar for The Street.